Bitcoin has done it again. The volatile cryptocurrency that has captivated investors and skeptics alike has shattered expectations, smashing through the seemingly insurmountable barrier of $100,000. This isn't just another price spike in the often turbulent world of crypto. A seismic event has sent shockwaves through the global financial system. For many, it feels like the dawn of a new era, one where Bitcoin emerges from the fringes of finance to claim its place as a major player on the world stage. But is this optimism warranted? The question on everyone's mind is simple. What does this mean for the future? Is this the moment Bitcoin cements its status as a digital gold, a safe haven asset in an increasingly uncertain world? Or are we witnessing the inflating of a speculative bubble, one destined to burst and leave investors reeling? The answer, as with most things Bitcoin, is far from straightforward. One thing is sure, Bitcoin's journey to $100,000 has been anything but ordinary. From its humble beginnings as the brainchild of the mysterious Satoshi Nakamoto to its current status as a hot topic of conversation among Wall Street titans, Bitcoin has challenged conventional wisdom and disrupted the established order at every step. To understand its future, we must first delve into its past. Bitcoin's path to $100,000 has been a roller coaster ride of dizzying highs and gut-wrenching lows. Early adopters, drawn to its promise of decentralization and freedom from traditional financial institutions, rode a wave of euphoria as Bitcoin's price surged in its early years. But these gains were often followed by dramatic crashes, testing the resolve of even the most ardent believers. One thing remained constant through the volatility: Bitcoin's ability to generate headlines. Whether hailed as the future of money or condemned as a tool for criminals, Bitcoin refused to be ignored. This constant buzz, coupled with its limited supply and growing acceptance by merchants, fueled a growing sense of FOMO, fear of missing out, among investors, further propelling its price upwards. The COVID-19 pandemic of 2020 marked a turning point. As governments worldwide injected trillions of dollars into struggling economies, concerns about inflation and the debasement of traditional currencies sent investors flocking to safe haven assets. With its decentralized nature and limited supply, Bitcoin suddenly seemed like a viable alternative to traditional hedges like gold. Bitcoin's appeal extends far beyond its potential as a store of value. Its underlying technology, the blockchain, has sparked a revolution in the tech world, with the potential to transform industries ranging from finance and supply chain management to healthcare and voting. This potential for real-world application has attracted a new breed of investors, one more interested in Bitcoin's long-term potential than its short-term price fluctuations. Institutional investors, once wary of Bitcoin's volatility, have begun to dip their toes into the crypto waters. Companies like Tesla, Square, and MicroStrategy have made headlines with their multi-billion-dollar investments in Bitcoin, signaling a growing acceptance of cryptocurrencies by the corporate world. This influx of institutional money has injected legitimacy and stability into the Bitcoin market, further bolstering its price. As Bitcoin's price has surged, so too has its public profile. Celebrities, athletes, and politicians have all weighed in on the cryptocurrency, further amplifying its reach. This mainstream attention has led to a surge in new investors, eager to get in on the action and potentially strike it rich, but this newfound popularity also brings new challenges. Bitcoin's meteoric rise has not gone unnoticed by regulators worldwide. Governments are grappling with how to regulate this decentralized currency. Some view Bitcoin as a threat, a tool for illicit activities. Others see it as an opportunity for innovation and investment. This regulatory uncertainty casts a shadow over the Bitcoin market. Government crackdowns could spook investors and send prices tumbling. China has banned all cryptocurrency-related activities. This move sent shockwaves through the market. The decentralized nature of Bitcoin adds to the complexity. With no central authority, it's hard to regulate. Is Bitcoin a currency, a commodity, or a security? The answer depends on who you ask. This lack of clarity creates a patchwork of approaches worldwide. Despite challenges, the regulatory landscape is evolving. Some jurisdictions like El Salvador have embraced Bitcoin. Others explore CBDCs to harness blockchain benefits. The coming years will be crucial for Bitcoin regulation. Even as Bitcoin celebrates its $100,000 milestone, a chorus of skeptics continues to warn of an impending bubble burst. They point to Bitcoin's history of volatility, its lack of intrinsic value, and the speculative frenzy driving its price as evidence that the party can't last forever. For them, Bitcoin is nothing more than a digital tulip mania, a speculative bubble destined to pop, leaving investors holding the bag. Bitcoin's price has indeed been driven by speculation, particularly in recent years. The fear of missing out, or FOMO, has pushed many investors, both retail and institutional, to jump on the bandwagon, often without fully understanding the underlying technology or the risks involved. This speculative fervor has created an environment where prices can swing wildly, based on sentiment, news headlines, and even tweets from influential figures. Critics also argue that Bitcoin lacks intrinsic value. Unlike traditional currencies, which are backed by governments and central banks, or stocks, which represents ownership in companies, Bitcoin's value is derived solely from the beliefs of its users. This, they argue, makes it inherently unstable and susceptible to manipulation. While these concerns are not without merit, Bitcoin proponents counter that the cryptocurrency's value proposition extends beyond traditional measures of worth. They point to its decentralized nature, its limited supply, and its potential to disrupt the existing financial system as reasons to be bullish on its long-term prospects. Only time will tell who is right. However, one thing is sure. The debate over Bitcoin's actual value is far from settled. Bitcoin's energy consumption has become a growing source of controversy. The process of mining Bitcoin involves solving complex mathematical problems to validate transactions and secure the network, which requires vast amounts of computational power. This, in turn, translates into a significant carbon footprint, as miners rely heavily on fossil fuels to power their operations. Critics argue that Bitcoin's environmental impact is unsustainable, particularly as the world grapples with the urgent need to transition to cleaner energy sources. They point to the fact that Bitcoin mining consumes more electricity than entire countries, and that its carbon emissions are on par with some of the world's most polluting industries. The Bitcoin community is not oblivious to these concerns. There has been a growing push towards more sustainable mining practices in recent years. Some miners are turning to renewable energy sources, such as hydroelectric, solar, and wind power to reduce their environmental impact. Others are exploring more energy-efficient mining hardware and algorithms. However, the transition to a greener Bitcoin mining industry is still in its early stages. The economics of mining are complex, and many miners are hesitant to switch to renewable energy sources if it means sacrificing profitability. Finding a balance between environmental sustainability and economic viability will be crucial for the long-term health of the Bitcoin network. As Bitcoin's price has soared and its profile has risen, it has become increasingly clear that the cryptocurrency is a polarizing force. On one side are the true believers, the early adopters and tech enthusiasts who see Bitcoin as a revolutionary technology with the potential to change the world. On the other side are the skeptics, the traditional investors and financial institutions who view Bitcoin as a speculative bubble, a fad that will eventually fade away. This divide is evident in the way Bitcoin is discussed in the media, on social media, and even among friends and family. Passionate arguments erupt on both sides, with each camp convinced of its righteousness. This polarization can make it challenging to have a nuanced conversation about Bitcoin, to separate the hype from the reality and objectively assess its potential risks and rewards. Navigating this divide requires a willingness to listen to different perspectives. To engage in respectful debate, we must acknowledge that there is still much we don't know about the future of Bitcoin. It's important to remember that Bitcoin is still a relatively young technology, and its story is far from written. Whether Bitcoin ultimately fulfills its promise as a decentralized global currency or fades into obscurity as a failed experiment, its impact on the world of finance and technology is undeniable. It has sparked a conversation about the nature of money, the role of technology in our lives, and the balance of power between individuals and institutions. And that conversation is only just beginning. For years, Bitcoin existed primarily in the realm of tech enthusiasts and early adopters, viewed with skepticism by traditional financial institutions. However, as Bitcoin matured and its price climbed, institutional resistance began to crumble. The turning point came in 2020 when MicroStrategy invested a significant portion of its treasury reserves in Bitcoin. This move, led by CEO Michael Saylor, signaled a shift in Bitcoin's perception. Square and Tesla followed, adding Bitcoin to their balance sheets. These endorsements opened the floodgates for institutional investment, bringing liquidity and legitimacy to Bitcoin. Bitcoin's rise coincided with growing dissatisfaction with the traditional financial system. The 2008 crisis exposed the fragility of centralized institutions and the potential for catastrophic consequences. Bitcoin, with its decentralized nature, offered a compelling alternative. the COVID-19 pandemic further exposed the limitations of the traditional financial system. With its fixed supply, Bitcoin emerged as a potential hedge against inflation. Central banks are exploring their digital currencies to modernize monetary systems. Bitcoin's ascent to $100,000 cannot be fully understood without considering the broader macroeconomic backdrop. The cryptocurrency's rise has coincided with a period of unprecedented monetary and fiscal stimulus, geopolitical uncertainty, and growing concerns about inflation. These factors have created an environment where investors seek alternative assets to preserve their wealth and hedge against systemic risks. Faced with the economic fallout from the COVID-19 pandemic, have injected trillions of dollars into the global financial system through quantitative easing programs and near-zero interest rates. While these measures have helped to avert a financial meltdown, they have also raised concerns about inflation, as the increased money supply threatens to erode the purchasing power of fiat currencies. The rise of geopolitical tensions, from trade wars to military conflicts, has further fueled the demand for safe haven assets. With its decentralized nature and its resilience to censorship, Bitcoin has emerged as a potential hedge against these risks, particularly for investors in countries with unstable political systems or weak property rights. These factors have created a perfect storm for Bitcoin, propelling its price to new heights. While some may view its rise as a symptom of speculative excess, others see it as a rational response to our time's unprecedented economic and geopolitical challenges. In a world grappling with pandemics, geopolitical instability, and climate change, Bitcoin offers a decentralized, censorship-resistant store of value. For individuals in countries with hyperinflation or capital controls, Bitcoin is a lifeline to preserve wealth and transact freely. Despite its volatility and regulatory challenges, Bitcoin's appeal as a hedge against uncertainty endures. Its resilience suggests it could become a permanent fixture in the global financial landscape. Bitcoin's rise signifies a shift in how we think about value, trust, and technology. A new generation, being comfortable with decentralization and skeptical of centralized institutions, are driving this change. For them, Bitcoin is more than an investment, it's a cultural phenomenon and a symbol of rebellion. As they assume influence, their embrace of Bitcoin will profoundly impact the future of finance. Bitcoin's surge to $100,000 has fueled bullish imaginations. Prominent investors like Cathie Wood and the Winklevoss twins see Bitcoin's limited supply and growing adoption as future growth drivers. They envision Bitcoin as the foundation for a new, transparent, and equitable financial system. While Bitcoin bulls are optimistic, skeptics urge caution. Critics like Nouriel Roubini question Bitcoin's viability as a currency and highlight its volatility and regulatory risks. They warn that stricter regulations could significantly impact Bitcoin's adoption and price. Regulation is the most significant wildcard for Bitcoin's future. While some countries embrace Bitcoin, others, like China, have cracked down on it. The evolving regulatory landscape creates challenges and risks for businesses and investors in the cryptocurrency space. Bitcoin faces a critical choice between integration with the existing financial system and a more radical, decentralized future. Integration could bring stability but might compromise Bitcoin's core principles. Decentralization promises a more equitable financial system, but is riskier and more uncertain. Bitcoin's future will likely involve a balance of both paths. Bitcoin's journey has challenged conventional wisdom about money and power. It has sparked a global conversation about the need for a more equitable and transparent financial system. Bitcoin's underlying technology and principles will continue to inspire innovation. Its next chapter promises to be as exciting and unpredictable as its past. Bitcoin's surge to $100,000 is a testament to its ability to defy expectations. Its journey has been marked by growth and corrections, showcasing its volatility and resilience. This uncertainty creates both risks and opportunities, attracting those who dream of a different financial future. Beyond price charts and debates, Bitcoin's true significance lies in its power as an idea. It challenges the established order and embodies the spirit of decentralization. Bitcoin offers a glimpse of a world where financial transactions are transparent and power is distributed. Its legacy lies in sparking a conversation and inspiring others to imagine a better future. As we stand at this pivotal moment in Bitcoin's evolution, the future of finance is being rewritten before our eyes. Bitcoin's rise and the explosion of interest in cryptocurrencies and blockchain technology are transforming how we think about money and value. The traditional financial system is being challenged from all sides. Fintech startups offer faster, cheaper, and more accessible financial services globally. DeFi platforms build a parallel financial system on blockchain networks. Governments are balancing innovation with investor protection and financial stability. Some jurisdictions embrace cryptocurrencies while others explore CBDCs. The future of finance will be more diverse, digital, and decentralized. Bitcoin will continue to play a leading role in this evolution. Bitcoin has left an indelible mark, challenging the status quo and driving global innovation. Bitcoin's journey to $100,000 is a testament to the power of ideas, the allure of innovation, and the unpredictable nature of technological disruption. It's a story that's still being written, a future that's ours to shape. Whether you're a seasoned cryptocurrency enthusiast, a curious newcomer, or simply someone intrigued by the potential of this groundbreaking technology, now is the time to engage, to learn, and to contribute to the ongoing conversation about the future of finance. What are your thoughts on Bitcoin's future? Do you believe it will continue its ascent, becoming a dominant force in the global financial system? Or do you see it facing insurmountable challenges, destined to fade into obscurity? Share your insights, perspectives, and predictions in the comments section below. Let's delve into the fascinating and ever-evolving world of Bitcoin together. If you're eager to dive deeper into the world of cryptocurrencies and explore the trends shaping this dynamic landscape, be sure to check out my previous video link to your previous video on cryptocurrency trends. Together, let's navigate the exciting possibilities and challenges that lie ahead in the age of digital assets. Don't forget to hit that subscribe button and ring the notification bell, so you never miss an update on the latest cryptocurrency insights and money-making opportunities. Smash that like button if you're ready to join the revolution and unlock the potential of decentralized finance.